Today, the loan repayments holiday is over. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, as we reported on Monday in our rant with Edwin, the banks are dialing back the mortgage holiday repayment schemes. And according to news, Australia's 4 big banks have indeed confirmed they're winding back large-scale COVID-19 support packages. Australia's banks will stop sweeping loan deferral schemes brought in at the height of the pandemic as economic stabilisation prompts a cooling off in demand for financial hardship provisions. The country's major 4 banks have begun stopping mortgage holidays, which were implemented industry-wide last year, allowing homeowners and businesses to pause repayment obligations for up to 6 months. A further 4 months extension was available in October to customers who were still financially damaged by the downturn. The Australian Prudential Regulatory Authority, or APRA, has indicated the COVID-19 deferral period would cease by March 31. However, banks have already started cutting off access to the scheme. Early wind-downs are partly being fueled by a stronger economic recovery from the coronavirus recession, with the Australian Banking Association flagging in December that more than 90% of deferral loans had resumed regular repayments. At the height of the deferral period last July, nearly 900,000 mortgages and small business loans were frozen, valued at around $245 billion. And the ABA Chief Executive Anna Bligh said that the need for wide-scale packages in response to the virus had become less important, and banks were moving to models where support was designed around the needs of each customer. What we are seeing is a much smaller group of people in very difficult circumstances than banks had anticipated we would see at this point in the COVID experience, she said. There are tools that banks have in their toolkit to help people who took a deferral and are still not able to move back to full payments, and they're working individually with those customers. National Australia Bank confirmed that Wednesday would be the last day loan customers will be able to apply for a COVID-19 deferral, which would provide them with a 2-month repayment freeze until the end of March. NAB Personal Banking Executive Rachel Slade said customers needing ongoing assistance would still have access to ongoing support. We will continue to provide support to those customers based on their individual circumstances, such as through reduced loan repayment, payment moratoriums, employment support, including resume and interview skills, and access to financial counsellors, she said. ANZ said around 24,000 home loan customers remained paused, and it was still accepting requests from customers experiencing financial difficulty. While ANZ has been supporting our customers through this period of uncertainty, regulators have made it clear that mortgage deferrals will cease at the end of March, an ANZ spokesman said. There are a number of options for those who are still experiencing difficulty, whether COVID-related or not. These include restructuring their lending to reduce repayments, partial payments, or short-term repayment pauses. The major Melbourne-based bank also confirmed the majority of loan deferrals had resumed normal repayments. Westpac also confirmed it was assisting customers on a case-by-case basis, while the Commonwealth Bank has implemented a foreclosure moratorium until September for customers who access COVID-19 financial hardship packages. We are contacting customers as they approach the end of their initial and extended deferral periods to discuss their individual circumstances, a CBA spokeswoman said. We also have existing solutions in place for customers facing hardship. Meanwhile, the ABC reported that borrowers are being pressurised by banks to make significant bulk payments as these loan deferrals begin wrapping up. Last year, the economic impact of coronavirus forced banks to offer homeowners mortgage payment holidays, and about 10% of borrowers accepted and paused their payments. In July, APRA announced banks could extend mortgage holidays to their customers by 4 months to cover a maximum period of 10 months from the start of a repayment deferral or until the 31st of March, whichever came first. With that March deadline looming, Australia's banks had stopped offering automatic mortgage holidays and are beginning to ask customers to begin making repayments. According to the ABA, home loan deferrals at Commonwealth Bank, Westpac, National Australia Bank, ANZ, Bank of Queensland, Suncorp and Bendigo banks dropped 80% between June and December, from 493,440 to 101,342. Business loan deferrals dropped almost 90%, from 228,070 to 25,497 at the 7 banks during the same period. But financial counselling services say while it was great to see people had started repaying mortgages, some banks were forcing customers to make large payments to make up for the deferral. Catherine Temple, Director of Policy at the Consumer Action Law Centre, said the organisation was receiving calls from borrowers who had been told they needed to catch up on what they owed. We're getting calls from people at the end of their mortgage holiday reporting that their bank is pushing them to make significant extra repayments to clear their arrears, rather than simply extending the length of the loan, Ms. Temple said. This kind of response does nothing to build trust with the community. In our experience, there are some people who are being pressurized to repay their arrears in bulk amounts that are not affordable. This has caused significant stress and can result in people taking out other loans to cover the mortgage, leading to a debt spiral. Kane Johnson is a financial counsellor at the National Debt Helpline and says calls to the hotline were starting to ramp up. They are specifically regarding mortgage deferrals. People have called their bank for an extension and it's been declined on unreasonable grounds, he said. Mr. Johnson said one person who deferred his loan for 6 months after losing their job due to the pandemic recently went back to work part-time. He said the man was due to begin full-time work in 3 months and had asked the bank for a 3-month extension, but that request was rejected. We also had calls from people who took a 6-month deferral period, and when they could start making repayments again were told that they had to pay their arrears in full, which for one person was $20,000, and then they would be allowed to make regular payments again. Another client was told that they had to pay another $1,000 a month on top of their regular monthly payments to bring their arrears back down. They're not allowed to demand people to do that, Mr. Johnson said. They are supposed to extend the loan term or increase the monthly payments by a little so someone can keep their original loan term. Mr. Johnson said the demand from banks were causing a lot of distress and some people felt betrayed. One client, who was told he had to pay his arrears in full, had been in contact with his bank every month during the deferral period and was never told that would happen, he said. He wanted people to know that even though the deferral period was ending, they still had legal rights. Contact your bank if you still require further assistance, and if you're unhappy with their response, call the National Debt Helpline, he said. Alexandra Kelly, Director of Caseworks at the Financial Rights Legal Centre, said people were being rejected by banks when they reached out for help after experiencing a second round of hardship, such as illness or a death in the family. The banks are saying they can't apply for hardship again. They are giving short extensions to loan deferrals, like a month, when it's clear that that won't help, Ms. Kelly said. They are refusing to extend it because it's no longer COVID-related. She said situations were only getting resolved when legal centres stepped in. I get a sense that the banks want to get people paying. They are being quite hard-lined and aren't being sensitive to when people are experiencing a new hardship, she said. 3 of the 4 big banks said that while the majority of their customers who had deferred their home loans had restarted their repayments, they will continue to provide support to those who were struggling. A spokesperson for CBA said that the bank had moved to the next phase of support for customer recovery, which included contacting customers as they approached the end of their temporary loan repayment deferral period to discuss their individual circumstances and available support. And the spokesperson said the bank had frozen forced sales for eligible coronavirus home loan deferred customers who were unable to return to full repayments until September. A Westpac spokesperson said about 75% of customers who had deferred loan payments had begun to repay. Customers with ongoing financial challenges will receive tailored support on a case-by-case basis. We look at a range of options as part of the process, such as providing more time to get back to regular repayments, the spokesperson said. A NAB Group executive, Rachel Slade, said the bank will continue to provide support to customers based on individual circumstances, such as through reduced loan repayments, payment moratoriums, employment support, which could include resume and interview skills, and access to financial counsellors, she said. And an ANZ spokesperson said the bank had been supporting customers through the uncertainty, but regulators made it clear mortgage deferrals would cease at the end of March. There are a number of options for those who are still experiencing difficulty, whether COVID-related or not. These include restructuring their lending to reduce repayments, partial payments, or short-term repayment pauses, the spokesperson said. When entering into payment arrangements with customers, we seek to make sure they are sustainable and realistic. Ms. Kelly said that she understood loan deferrals could not be extended indefinitely, but wanted banks to take a nuanced approach to repayments. There shouldn't be a hard and fast set of rules, because that leads to panic, and when people panic they borrow more money, and it leads to a bigger problem, she said. It needs to be done carefully. Everyone wants to get back to paying their loan. People don't want to give up their homes. Ms. Temple from the Consumer Action Law Centre agreed and said consumers needed to know that while automatic loan deferrals were ending, people can still apply for hardship assistance. Banks need to do the right thing by their customers. There's going to be a temptation for the banks to put pressure on customers to repay, but this simply won't be a realistic option for many Australian families, she said. Our message is for people to speak with their bank if they are in financial difficulty, and if you are unhappy with the response, make a complaint to the Australian Financial Complaints Authority. And I just want to underscore that sure, the banks might be dialing back specific COVID assistance, but they still have a legal obligation to provide ongoing support for those in financial difficulty. So talk to your bank, and frankly, don't take no for an answer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.